Hi and welcome. It's Chris out at the SI Experience. We hope you're all well, keeping safe. We're very excited today to bring this week our second power team member, who's super crucial, is what's going on in finance, what's going in lending, what's going in the market. We've got so many questions from you guys. As I say, we are doing this twice a week. So if you want to join our Facebook groups with exclusive content, weekly webinars, new products, offers, and more, just please register now or like or subscribe. It's at the bottom, and we'd be more than happy to talk with you about anything each week. But hopefully the value of the content that we've got is really valuable to you all. Again, if you've got any questions for anybody, please go to any investors, go to SI Solutions Clinic, Sourcing Investments /promo/clinic. We've had a lot of questions this week, which we're going to address today, so hopefully it'll be very useful. So without further ado, I'll bring in Mark. Hey, Mark, how you doing?
Hi, Chris. Afternoon.
So I'll introduce Mark. Mark is a senior finance broker from What's Commercial. Mark, we've been working together for a few years. You're on the power team of SI. You've worked with a lot of investors. And as I say, welcome to the SI Experience, as they say.
Thank you.
So Mark, well, let's get into this. So tell us a little bit about who you are and what do you do on a day-to-day sort of basis. So for people who are uninitiated or don't quite know.
Okay, so hi everybody. Mark Heywood. I've worked in financial services for 32 years now, and I've been working at What's Commercial Finance for the last 14. We are independent property and business finance brokers. Totally independent. We're one of the biggest, if not the biggest, in the UK, and we work with property professionals, both new landlords and experienced landlords. I usually say across the UK, across the world now,
Yes.
Mainly thanks to you guys.
Thank you.
And ultimately, our job is to engage with the client and source you the finance that you need to buy your properties and take your business forward. We currently arrange around £40 million of this kind of funding every month. Hopefully that will continue. Things have quietened down very, very slightly in the last few weeks. So yeah, look, always happy to help.
And I think that's something that we're going to discuss today. So we've got people entering in. So everybody who's on the call watching us live, please, if you've got any questions or comments or anything, you can ask it in the comments or below. So please ask away. We've already got a couple already, which is good, Mark. So Mark, yeah, so we've come on here. We really want to discuss, and I say from my side, I've been discussing with yourself, and we've got, is one of the biggest questions that is on the minds of a lot of investors is, how is Brexit? And again, it seems like a long time ago, Brexit, but Brexit and more importantly now, COVID-19 impacting lending and finance. And as I say, we rather than us speculate, and rather I've seen a lot of experts who I would say out there in the market saying various comments that lending is becoming easier, Bank of England base rate's going down, which I know is complete fabrication. So let's, here at SI, we like talking with the brokers. So why don't you give your take? What was it before, just to give a bit of context? And, from your side, what is the impact now, and what does it mean to individuals either in the UK or internationally?
Okay, so, well, hopefully I can reassure you, and Chris, after these years, that we'll always talk really candidly with you and your clients.
Yeah.
I'll do the easy one first, Brexit. No impact whatsoever for us. As I say, as one of the largest brokers in the UK, if lending had been sort of impeded, we wouldn't be arranging £40 million worth of this kind of funding every month. Brexit has had almost zero impact on your clients and our clients' willingness to invest in property. That's certainly the straightforward answer. In more recent times, yes, of course, we've all been affected by the pandemic. Has it affected lending and finance? Not in as much as the funding is unavailable. That's categorically not the case. It always amazes myself and my colleagues when we hear, I've had numerous conversations with clients over the last few weeks who will say, I've spoken to my usual broker, or I've spoken to a broker who has basically taken the time off or told me that the lenders aren't lending. I don't know where this information comes from, because it's absolute nonsense, to be frank. So,
Yeah.
what the actual impacts of the COVID-19 situation, there's probably been a few things that have just perhaps slowed things down slightly. The lenders like ourselves are having to adjust in terms of logistics and staffing and processing. So the processing time has perhaps been affected by that very slightly while they adapt and get their processes in order. The loan to value, so the amount that the banks will lend in relation to the value of the property, has probably across the board now been reduced. Whereas perhaps previously on average that would have sat around the 70 or even 75% mark. The lending at the moment is, again, on average between about 50 and 60%, maybe 65 at the top end. So the lenders have just got a little bit cautious in the last few weeks, just around the sort of market uncertainty. They're not quite sure how properties will be valued, once we come out of the other side of this. So they're probably just adopting a slightly more cautious approach with regards to the amount that they will lend. Valuations have been the main stumbling block for applications or purchases that are currently being processed. Obviously, many, if not most, valuers can't physically get out to value the property, especially if the property is tenanted. But some of the banks are now adapting to this, and they're able to offer, for example, automated valuations, or as we call them, desktop valuations on certain types of property, which means that they can carry out the due diligence from the desk. Therefore, the deal can progress and indeed complete. So that's been very, very useful. At the back end of the process, the legal stage, obviously there's challenges in respect of clients signing documentation with their lawyers. They'd normally go into the solicitor's office to do that. That, of course, is a challenge at the moment. But what we're trying to do is get any finance applications as far down that process as we possibly can. So the minute that we get some sense of normality back, we can just tick the final few boxes and get the funds issued for the client. Probably one other thing, Chris, that's crept in the last week or two is the bank's cautiousness around capital raising. What we mean by that is if a client has invested in a property or purchased a property using their own funds, and they then want to raise finance on that unencumbered house or asset, the banks are being a little bit cautious around capital raising at the moment. So that's become a little bit of a challenge too. But again, we can advise each client on that on a case-by-case basis. So
with that, Mark, I mean, again, that's nothing new. And when I say nothing new, the whole idea of capital raising, if we put this in context with everybody, I think, in certain regulators' minds, and this is not just in the UK, but properties are actually, it's an asset class which is, has the potential to be used for money laundering purposes, etc. So acquisition, refinancing, backing out, being able to clean money. And I think that's the premise of all of this, right? And because when I've been refinancing, any of my properties, the questions that come out from the lenders, and this is even, 2, 3, 4, 5 years ago, what are you going to use that for? Where's it going to go? And I think, and again, it's sort of like, it's not a knee-jerk reaction that's happening. It's just probably more acute at the moment, I think. But that actual fact of, where are you going with this money? And so we've had to obviously say, well, we're going to, buy another property. Does that, and show them an example of what we're going to do. And it's more about working with you as the broker to actually let the lender be comfortable with what you're using it for. Does that make sense? And then obviously,
absolutely. And that in terms of what's the way that we operate, that's exactly the sort of thing that we would, we'd carry out that due diligence with the lender right at the start for the client. So we're not going to get to a process in the finance application where all of a sudden the lender decides that they want to put this particular mortgage on hold, or they're not overly comfortable with it. You're absolutely right. The phrase we often use is the lenders want to follow the money. So whereas it would ordinarily be perfectly reasonable to introduce a client to a bank on the basis that the client's bought a property using their own funds, it's worth £100,000, it's owned outright, and they want to raise, hypothetically, £65,000 to move on. They're effectively recouping the money that investor has already invested themselves in that property, and that would normally be pretty acceptable. You're absolutely right with what you just alluded to. I think the lenders will be more focused just on the current time on following that money. So we'd probably need to actually demonstrate that there is a property to be purchased at this moment in time, using those funds. And if not, the bank are likely to say, let's just put that on hold until you've found a specific property that you want to invest in as your next property.
Yeah. But again, this is where everybody wants a blanket answer, and this is what I always find, especially in sort of the property investment space. Where's the best location to invest right now? What's the funding that's available? People are wanting absolute, definitive, black book certainty. When in actual fact, the commentary from many of us in this sector is, do you know what? It's a case by case basis. Here is the guidance. Does that make sense? But at the end of the day, this is why we have parity members like yourself. We had on Tuesday Andrew Garvey from JMW Solicitors, Weakness and Understanding, and you know him and work with him closely. From the legal side, and as you said there are potential issues with the legal side. So, for example, getting searches done. Well, what's happening on the searches side is that many of the county councils around the country have the ability to do an online search. And as you said, like with the surveyors, so with some of the lenders, there is a discussion there with the legal team that they were happy to work with the finance side as well. So it's desktop valuations. And I think what this whole shows is that people want, here's how it works. Here's how it works.
Yeah, absolutely.
The reality is, hang on, here's the guides. You might actually get a better, if you work well with people like yourself, to understand what you get is only what you need to know. Because at the end of the day, if you've got somebody like myself who's been probably investing for 12, 14 years, I'm going to have a very different discussion with lenders to somebody who's completely brand new to the market. Does that make sense?
Absolutely.
And not necessarily get better rates. It's just going to be a very different discussion with you and with the lenders.
Yeah, you're absolutely right. And if you see a large element of our marketing, we have used this word for 14 years, and that's bespoke. The finance arena that we work in is absolutely that. And you are completely correct. And it's a conversation we have daily. It's not a one size fits all kind of marketplace. If we are working with a client who wants to invest in a standard buy-to-let property and has no aspirations of going beyond that, to be honest, they probably don't need a commercial broker. We'd ordinarily refer them to a residential broker who would introduce them to a standard buy-to-let lender. Those buy-to-let lenders operate with what we call boxed products. It's what you've just described, Chris. It's black and white criteria, and there will be certain geographical locations, certain types of property that lender is not prepared to lend on. Equally, there will be set parameters in terms of the loan size and so on. So those clients categorically know what's available for them. It's there in black and white. The downside with that is there's no scope whatsoever for any negotiation. So you either fit that lender or you don't. In the commercial world, and the word is quite confusing because most of the properties, if not all the properties that we're funding, are residential properties. The word commercial relates to your clients because they're building a professional property business.
Good.
So the banks class your clients, Chris, as commercial entities. The difference in our world is, you're right, it's not one size fits all, and each bank has their own requirements in terms of the property investors that they choose to support. Some are quite happy to support the first-time landlord. As you would imagine, the terms perhaps won't be quite as sexy as they would be for someone like yourself who's done this for years.
Yeah.
Other banks will stipulate, we want the client to have, for example, a couple of properties that they've owned and managed for a couple of years before we'll step in and support them with the next one. With the best will in the world, your clients, and indeed our clients, won't know that. And why should they? It's not their bag. And that's exactly, and I know you expect me to say this, that's exactly why I would categorically recommend that they engage with a commercial mortgage broker who is au fait with the market, aware of what the lenders are offering. So in the current pandemic, lenders' criteria honestly changes every single day.
Yeah.
I can honestly say hand on heart, I would have to refer to most lenders' up-to-date criteria before I progressed with a formal application, because it's changing daily. But we're working with those lenders and banks every single day, so we're very, very well placed to guide your clients.
So as we've got here, just on the screen here, Mark, which you can see, these are the sort of the various factors which, again, have got to be considered. And, it's residency status, so UK-based, international-based, which area of the globe, their experience, value, purchase price of the property, property type, property location. And I think this is the whole point, this is not a black and white scenario. The point is that anybody can get lending if they've got the right business structures, they've got a decent deal that is stacked up, they've got everything around them. Does that make sense? Including, for example, bank accounts, they've got the company set up, and it's not just tick, tick, tick. All of these things, if they are done and done well, at the end of the day, it doesn't matter if you're a first timer. We've got a decent question coming in a minute, which is from Stella. So I appreciate that, Stella. In actual fact, it's probably a good time to put it on the screen, Mark. So Stella, and I believe Stella is from South Africa. So she's saying, how can sourcing investments help someone who has no base in the UK, like bank account and address, to obtain funding from scratch to invest in the UK? So if I take the first bit, and the first bit is, Stella, the very simple thing is we've been doing this for 5.5 years now. We have links with able to open company structures. Again, you would have to have that discussion with either your mentor, who has been doing it for many years, to be able to talk with you about, have a chat with the accountant. Is it the right tax structure for you? If, for example, limited company, what is your current situation in South Africa? Do you have a limited company over there? How does the double tax treaties work, etc.? So that discussion needs to happen. But we can set that up, or you can set that up through the SI platform. With regard to bank accounts, once you've got a company structure set up, you can apply online. We've got 4 currently options for bank accounts, of which we've been 100% successful so far. But again, if you're from a country which is on the banned list, somewhere like deepest, darkest Nigeria, that's nothing to do with who you are. It's actually to do with the list which the governments provide, which are normally high anti-money laundering targets. And so again, if you're from there and stuff like that, it's going to be a bit more difficult for me to say that you're going to get a bank account. So all of this stuff can be done through the system to get you set up as the investor. And then Mark, from your side, those things in place, how are they able to attain funding from scratch in the UK?
So quite appropriate, actually, this one, Chris and Stella. Hi. I submitted 3 applications yesterday for a client from South Africa who was buying some properties in the UK.
Sorry, she says she lives in Belgium. Sorry, Stella.
Okay.
So it doesn't really matter. It's the same
thing.
Principle.
It's outside the UK, so it's pretty much in that respect, it is a blanket approach. So I guess the first thing for overseas nationals who are investing in the UK, from my perspective, in respect to the finance, first of all, I have got far more limited options available for me. So fewer banks to approach on your behalf. If you are a first-time landlord, the number of banks is reduced even further. And the likelihood is, perhaps on your first 1 or 2, it may be that we've only got one funder that will support you with that transaction. But that's fine, we only need one. But we'll discuss that with you on an individual basis. And we'll also work with you to sort of plan ahead in terms of to understand your aspirations, where you want to take your business. And we'll also equally be thinking, well, where can we take you in terms of which banks can we introduce you to further down the line as your property business develops and you become more experienced. So yes, once you've got all the logistics set up and you've created the entity that you want to buy the properties in, we can step in, have a chat with you. We then need to focus our attention on the property itself. So to give you a good example from the South African client yesterday, my preference was one particular bank purely because they were offering the best rates for this particular client. But unbeknownst to me, that bank had in fact already advanced funding on quite a number of apartments in this apartment block in Liverpool. So in their opinion, they were heavily exposed in that particular block of apartments and were unable to help. So we then had to look at the second option, for that particular client. So there's other factors such as, the bank's willingness, or, every case, sounds a cliche, every case will be assessed on its own merits. And in that particular occasion, the bank would have normally done the deal had they not already supported a number of other investors to date in that particular project. So yeah, we can step in, understand your circumstances. We will then introduce you to the right banks, and then ultimately, get the funding that you need. We'll always be really, really transparent. We tell you exactly what terms we expect day one. So you're never going to have a situation where your anticipation of what the mortgage or the finance will look like differs from reality. We will advise you that in our very first conversation once we understand a little bit more about you.
So, and again, what we've got on the screen here, Mark, is, as I say, guidance as it stands right now today. So again, the key thing is, and I think for everybody, who's going to be watching this live now, or even when you're watching it again later on, when mostly people consume it in their own time. So with purchase and refinance, it's just to sort of, best case scenarios at the moment, you've got about 4.5% on the lending rate. Typically, let's go back. Typically, 2 months ago, it would be 75% loan to value.
Yeah, correct.
Yeah, a maximum of 65. But again, what I want to highlight there, and this is something that I'm passionate about, to be able to explain. There's more than just a very simple black and white of this. A lot of, so for example, we will take one particular lender who deals with a lot of international clients. Suddenly you've got all of the lenders in the market have now been told by the government, hey, mortgage holidays for people. Hey, by the way, you've got to help facilitate, with regard to other funding options that we've just said at policy 4 weeks ago, which Boris has come out with before he got poorly. And the trouble is that, when you I talk to, I've got some NatWest commercial loans, and I talk with my NatWest broker, my manager, business manager. And quite simply, they are absolutely snowed under with figuring out how they're going to apply the government policies in less than a 3-week period, of which the government have promised up to 300 billion in various sort of schemes and loan schemes and support schemes, of which, they haven't worked out how they're going to facilitate that, and never mind HMRC. But the lenders and the banks are very much part of that plan, and they're figuring out themselves, what does that mean to them? And how, for example, can they suddenly give everybody a mortgage holiday and apply all the administration? And so their focus has gone from, hey, business-wise, oh my God, we've suddenly got so much more administration to do. Let's just pause our incoming. It doesn't mean we're going to stop, but we're going to reduce the volume down because we're focusing on sorting operational administration based off the fact of government change of policies in order to facilitate, hopefully the economy bouncing back and getting through this period of time, which won't last forever. But again, they're the reasons, a lot of the reasons why this perception of, interest rates have gone down as a stimulus idea in order to stimulate more lending. Well, as it stands at the moment, some of the mortgage rates, or quite a few of them, have gone up. And so people are going, well, people in the market, and their logic goes, well, Bank of England's base rates has gone down, so therefore sort of lending is cheaper for the banks. So lending, for me, should be coming down, when in actual fact, it's gone up a couple of points. And the question is why? Well, the real reasons why is because they're taking a risk position. Every time that they are lending money, just as if I'm lending money, to one of my best mates, there is a risk position there. I have to assess that. Am I going to get my £10 back, or am I going to get nothing back? And so with the environment at the moment, with landlords potentially being openly affected by people not being able to pay rent, and that's not everybody. There are many, many demographics, like, for example, students are still continuing, they're still paying their bills, etc., because it's still fundamentally a contract where it has to be fulfilled. But the banks are taking a position of, it's a bit of a higher risk situation at the moment. So in order for us to lend to you, Mr. Investor, that's why rates have gone up slightly. And I think, Mark, hopefully I've explained that, nice and simply, because I don't think people are quite understanding. There's a little bit more to it. I
agree. I've had quite a number of clients that we've already secured mortgage offers for, who are asking that question: have rates come down? No. Now, to be honest, Chris, most of the banks that we're working with in this sector haven't increased their rates, although that has happened with a small number. What they've actually done is reduce the risk in terms of the loan to the value.
Yeah.
So being brutally honest, apart from a few tweaks in the processes and a few challenges around valuations, if I say it's business as normal, that sounds slightly blasé, but it is to a degree for us. You know, we're still working with clients, we're still putting applications into the banks. Deals are still happening, deals are still completing. We're just all having to adapt to a slightly different process.
So here's a question that's just come up from one of our Facebook group. You're live. Hello, Mark. Would a bank consider giving funding by mortgage a package of small-scale properties rather than a large-scale HMO? And what leverage should he look at? So I'm guessing I'm understanding here. I'm not sure who this is, but again, it very much depends on your situation, what are the deals, etc. And the best way for Mark to be able to help you is after this, we'll show you contact details of how you get hold of Mark. But he needs to understand more. This is not just a very, very simple.
But the answer is yes. The answer is fine. It's fine, and it's a really good question. And once we've understood what the investor is all about in terms of their experience and background and so on, and residency status, the next question is then directly to do with the property. So we need to understand what type of property is it. Is it a normal house? Is it an apartment? Is it is it an HMO? It's a really good question because every bank has their own minimum loan or minimum valuation requirements.
Yeah.
And again, that can change. We're on the ball with that. So you're not going to waste your time working with a lender that doesn't want that deal. We can introduce you to the right lender. If you've got fairly, whether it's one or a number of more modestly valued properties, we can still help. As we speak today, the minimum loan that I can achieve is £25,000 or 25,001.
Yeah.
And the bank that will offer that at the moment is being extremely conservative, and they're setting their sort of stall out at 50% loan to value. Yeah. So the property at the moment would have to value at least 50, 60,000 for that to work. Ordinarily, we can be looking at properties at, maybe with a lower value of say 35,000 and just making it work. Yeah. So it's definitely an option and definitely one we can have a look at for you, whoever this is.
So please, we'll show you how to get in contact with Mark. But it is a good question. So thank you, anonymous Facebook user. Appreciate that. So we've got a few other questions that have come in, which I think are very appropriate. So this is John from Hong Kong. Aren't all finance brokers the same, Mark? Why does it matter who I choose?
Shall I be really arrogant now?
Yeah.
Well,
just probably. Okay,
I will. No,
it's from my side,
good
Mark.
Question. Very good question, and it's a very good question because we often engage with clients who have already spoken to another broker. That's quite common, and for one reason or another, the original broker hasn't been able to help them, and that can be for a number of reasons. A traditional residential mortgage broker, and I am very much generalizing here, isn't ordinarily au fait with working with, for example, overseas nationals, because the traditional residential buy-to-let lenders here in the UK do not support overseas nationals. So it's not something that residential mortgage broker would be coming across on a regular basis, and therefore it'd be more of a challenge for them to place that deal and help the client. In my world, this is exactly what we do. We work with commercial entities or professional landlords, I suppose is the right phrase. Whether that be a brand new landlord wanting to create a business or an existing one. In terms of ourselves, I might as well give ourselves a little plug since you've been kind enough to invite me on here, Chris. For the last 2 years, Watts have been awarded with the accolade of Commercial Mortgage Introducer of the Year. So that's an award or title that the banks vote on independently across the whole of the UK. So in their opinion, whether it's right or wrong, I'm not sure. In their opinion, we're the best finance broker in the whole of the UK, and we have been for 2 years running. We've just been nominated for a third year only this morning, bizarrely. So I hope that demonstrates that we must do something right. We know what we're doing. We treat clients in the right way. We don't in any way, mislead people and ultimately not deliver. So I think you need to be working with a specialist commercial or property finance broker because it can really affect your business if you're introduced to the wrong bank or you're offered the wrong deal. I spoke to a client yesterday who, I spoke to a residential broker yesterday who was trying to arrange a deal for his client. And it was a development deal. So the client was actually buying a property, and he had planning permission to convert that into 16 apartments. And it was clearly not the broker's normal business. And the broker was trying to head down a completely incorrect route for the client, which would have been very cost effective, very expensive. And it was really important that broker actually then introduced the client to us, who could, without sounding arrogant, do the job properly and get the client the absolute best deal. So I would
think from my side, Mark, it's a very, very, very simple thing. I've been in this game for quite a long while. I've done, big sort of developments that we used to do down here when I was, working with the property fund, etc. And at the end of the day, there's a very simple crux to it. I've been through a lot of brokers. I've been through a lot of people who tell me that they're brokers. Same with lawyers. And this is why, for example, we brought our expertise of actually, investors here at SI and working with people like yourself. And all I need to say is there is no other reason that What's Commercial are on the panel for sourcing investments for our clients other than you get it done. And more importantly, you're open, you're honest, and you will try your damned hardest to get the best deal for clients. And more importantly, not, and I think there's a really good question here, which is a question that we got through the clinic last week. I've had brokers tell me, and again, I'm just not diversifying here, upfront fees, do you? And again, the reason why brokers do upfront fees is normally the case of they don't know who you are, they don't know who the investor is, so they want to make sure if they're going to go and do a load of work, they get paid £500 at the very least, which is fine. And I'm not saying that that's not a way of operating, because there's a lot of time wasters. My big tip to investors is do not waste the time of your broker. Okay, so by doing that, that it's about relationships and long standing. Don't do that. And also, they didn't get the same rates as they quoted me at the start. For example, in this case, it was 4.1%, and then it changed to 5.9 just before completion. And again, without getting into the detail, Mark, this is a story that I hear a lot, and I hear about it where people think that brokers, for example, have some kind of special secret sauce or a special deal. And a lot of the brokers use that element of, oh, by the way, I've got, the secret answer here for you. And people, will get that. At the end of the day, the market is the market. And when I say in residential, it is. In commercial, with regard to you being able to work on developments, we're talking about big scale on, we're talking about lending. So what, 40 million or 14 per month?
40.
Yeah.
So I mean, I was smirking when the question came up, Chris, because it's really, really relevant to us in particular. So for 14 years, we've never charged an upfront fee. And that was just a decision that we took day one, pretty much, because we equally hear horror stories, such as the example in front of us. It's nonsense. It's absolute nonsense. And you're absolutely correct. And as I said earlier, especially with overseas nationals, there is a very, very small number of banks that I can approach on your behalf, on their behalf.
Yeah.
And I've got consequently a very, very clear idea of what terms and what rates they will offer particular clients.
Yeah.
It is no different for any other broker in the country. So for anyone who suggests that they can get a better deal or a higher loan size or a lower rate, being brutally frank, it's ridiculous.
Yeah.
And again, without wishing to blow our own trumpet, as one of the biggest or the biggest brokers in the UK, and in the bank size, the best for 2 years running, we're going to get some decent terms.
Yeah.
And equally, we're all busy people, and we value the relationship that we have with companies like your good selves, who, if it wasn't for you, we wouldn't have access to the clients that we're helping. We're all grown-ups, and we'll be straight, and we'll treat people fairly, and everything's transparent. And if we can't do a deal, or we don't feel we can achieve the level of funding your client wants, we'll tell them at the start, because there's just no point wasting time. And whilst I do respect brokers charging a fee, because there is a lot of work at the outset, But the last thing we want is one of your clients coming onto a webinar or going to a property event and saying, goodness me, I've paid Watts £500 and they've not delivered. Because we've just ruined our last 14 years hard work.
Yeah.
So no upfront fees, no.
So here's a great question that's just coming from Tim. Hi, Mark. Due to the need to show future property purchase to refinance, would you advise that to stay away from using angel investors' funds to purchase a property at this stage, with the idea of potentially paying them back in 6 to 12 months from the refinance now potentially being problematic? Now, that's a good question.
It's a really good question, and it's very common because it's now a common strategy. I think we'd be okay with that, to be brutally honest. So I'll probably split my answer into two. If you needed to raise capital to repay your angel investor, that's completely fine, because presumably you'll have an agreement, some sort of formal document that we can evidence and present to the bank, so they can actually follow that money. And I guess that one of their conditions of their mortgage will be that on the day of completion, the solicitor transfers those funds back across to your angel investor. So that's quite straightforward. If, however, as is often the case, you were simultaneously raising some capital on top of that, perhaps because you've added value to the property, you've maybe refurbished it, for example, it's that extra capital raising element that might be a little bit more challenging if we haven't got a specific property that you're currently buying. That said, I'm working on a deal at the moment with a client, and the bank in question has compromised and said, well, look, you're asking us for, I think it was £70,000 extra capital. Sorry, it was 140. It was quite a large property. He wanted to raise £140,000 extra. And the bank have said, look, because you've not got a specific property in mind just at this moment in time, we'll give you half of that. So they were actually comfortable giving this particular client 70,000 of the 140, and the remainder when he'd found a property to invest in. So again, it's sort of case by case. Sorry if that sounds slightly cliche.
No, I think, and again, what you've said there is, as long as you've got the ability to show that and have that discussion of what the intention is with the current property, where the funds are coming from. The key thing is, Tim, and everybody listening to that is, you've got to talk. I mean, the finance brokers, at the end of the day, normally know more than your own mum. Do you know what I mean? Around your financial situation, your business situation. And the more they know, does that make sense? The more they can help you with facilitating what's available in the market. Absolutely. And where and what would help your specific situation.
And Chris, sorry to jump in. The point on that example, which is a really good example, because it's a common transaction. The point there is, or the position that I would put across to the bank is whether you're repaying an angel investor or JV partner, who invariably would have either a charge on the property or certainly a formal loan agreement in place. That's no different to repaying a bridging loan or another mortgage. So that I would say, don't be discouraged to enter into those deals and carry on, growing your business and getting into those deals. We'll definitely be able to, help you refinance and redeem the angel investor loan, certainly.
No, that's great. I really appreciate the Mark and your advice on that. So I think just to we've got something fun coming up in a minute, which Mark doesn't know. It's going to be a bit of a theme because
aren't the icebreakers normally at the start of these things?
No, you're not going to do it at the end.
I'll just bail out early.
But as I say, what we've got a summary here for everybody is, advisors need to adapt any structure to do a good deal effectively. And as I say, great questions there. That means, for example, raising that angel finance, obviously discussing with them, for example, here's some opportunities. I mean, on SI, I think we've had over sort of nearly 49 properties this month already uploaded. We've brought on an extra sort of 7 sourcing agents, and it's just been, in our side, the business is actually going very, very, increasing and very well. And so I think, at the end of the day, when there is confidence in the market, I'm not saying that this is an absolute fire sale, but I think there's going to be some opportunities combined with stuff like, Section 24, which landlords are struggling with, who own individual properties. And obviously from a taxation point of view, it's going to be less tax efficient to hold those properties. So with a multitude of factors, including, as I say, the pandemic. But the key thing is, I think with all of this is have a conversation with Mark and Keith, point out what your business plan is, what your current situation is. And as I say, with 32 years, did you say?
Yeah.
Years of experience.
Isn't it?
Yeah, 32.
I think it's actually, let me think. No, it's 33, dare I say.
No,
33.
And again, I sort of, I'd say this to mentees and clients is, I wish I could download with a USB lead, everything of experience that I know and can literally just impart that experience. And it's not just knowledge, it's the experience side of it. And that's why, talking with somebody like a Mark, as I speak to your broker, you're getting that, not just what's available now, but the experiences, the long-term relationships. And I think it's crucial that people have that conversation with you. So honestly, I really appreciate your time today. I'm sure everybody does. We were going to do half an hour, we're already at 40 minutes, Stella is it possible to contact you for a personal discussion? Stella, we are always here at SI. If you go to if you've got any particular questions, go to the investor clinic area. But if you really want to arrange a conversation with myself or any of the SI team, and as I say, I will absolutely have a conversation with you. Please contact admin@sourcinginvestments.co.uk and the team will arrange it and best we can. But thanks for your questions. I really appreciate it. So what was I going to say? We're going to finish this up. Okay, and to finish it up in a fun, nice way. And so this is going to be our 60 seconds. We want to get to know who you are a bit more, Mark. So what I'm going to do is I'm going to put you in center and front stage. And just 1 second whilst I get everything rocking and rolling. So obviously, Mark, one of the things...
I've no idea what's coming here, by the way.
No, you don't. And this is what's great.
Typical SI.
So... are you ready? Can somebody put 60 seconds on the clock for Mark? So here we go. Red or blue?
Red. Blimey.
Describe your teen self in 3 words.
Sorry, Chris. Describe
your teenage self in 3 words.
My teenage self. Out. Hardworking. I'll class that as 1 word. I don't know.
What's the strangest thing you've ever eaten?
This is the whole point, some form of testicles somewhere in Europe. Don't know what it was. That's why it was so strange.
If you owned a super yacht, what would you call it?
Manchester.
Yeah. On a scale of 1 to 10, how cool are you?
10.
I'll ask your daughter about that, see if that's the same.
So that was her answering. She was heckling in the background.
Who's the best player who's ever played for Manchester United?
Oh, man.
Got to do one. Come on.
Ever or that I've seen?
Ever.
Probably George Best.
Yes.
Eric Cantona's up there. I could talk all day about that.
Oh, what's the first thing you notice, because you meet a lot of people, about somebody when you first meet them?
Shoes.
Shoes, old school.
Clean or clean, dirty or clean is what I mean by that.
Use 1 word to describe your computer ability.
Abysmal. Thanks for that.
What's your favourite band?
My favourite band?
Yeah.
Stone Roses.
Manchester, obviously.
Sorry.
If you're a superhero, what would your power be?
Passion. And fire and passion. I mean, not lovey-dovey fashion. Passion.
How do you like your steak cooked?
I'm changing in my old age, Chris. I'm going down to medium now.
Do you have any pets?
No.
Tea or coffee?
Coffee.
Champions League or winning the Premiership and the FA Cup?
Champions League.
What motivates you?
Money. No, that's not fair.
That's for your boss.
Yeah.
What makes you angry?
Incompetence and poor service.
Yes. And what's your best feature?
My drive, as in passion, drive.
Love it.
I'm marginally behind you on that one, as in let's get out there and do it.
Well, that's 60 seconds with Mark, and it's probably a bit longer than 60.
I'm sorry, I copped out of a couple there.
Really, 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 appreciate your time. And you know, it's more than a pleasure to have you on the power team and stuff. And I hope everybody gets to know you a lot more and realizes that you're super passionate about service. You're super passionate about obviously doing the best for the clients. And as I say, that's why, you know, from my side personally, you know, you guys are on the power team because, you know, you've never let anybody down yet, and I will not. So, you know, thank you so much, Mark.
No, Chris, thank you. And if I may quickly, let me just say thanks to you guys as well, because we've met some really, really good quality clients that have come and that have been introduced to us by Sourcing Investments, who we continue to work with. We probably, you know, help them with the first deal, and then we've sort of, you know, built the relationship as their, you know, as their property investing has grown and developed. So thank you guys for, you know, for introducing your clients into us.
No, absolute pleasure. And Mark, as I say, you know, you're available to contact Mark. Everybody, please, you know, from your side, we've obviously got the Sourcing Investment System. You can do a free trial. You can join our Facebook groups. As I say, register now or subscribe. And you can contact Mark through the Power Teams page in the SI platform. And Mark and the team and his support team are there all the time to help you, even when there's a pandemic going on. Things are still happening and lending is still happening. But thank you so much, Mark. Really appreciate it.
Thank you too.
Have a lovely day, mate. Thank you so much.
Thank you. Cheers.